today is focusing on our DataFlex credit alerting and prospecting services, which enable you to access credit bureau data for a number of different member acquisition and member retention strategies. And we'll be discussing ways to do all of that. For those of you who aren't familiar with LKCS, this graphic shows a little bit about what we do. LKCS has been in business for 50 years. We've been working with credit unions and banks since the early 1960s in a variety of marketing capacities. And our focus for the last 10 or 15 years has really been utilizing data and technology to improve your marketing efforts, to really target market, to your account holders and to prospective members living in your communities. So there's a few of the things that we do, and obviously what we're going to be talking about today actually covers many of those different areas. We're going to talk first about DataFlex credit alerting. And credit alerting is used primarily for retention and cross-sell, but we'll also show in a few minutes how we can use it for member acquisition. When we look at ways that we retain members, a lot of our credit unions, a lot of our customers rely on what we call traditional loyalty programs, things like matrix mailing campaigns, onboarding campaigns, either a series of letters or a series of emails that are sent out to existing account holders, new account holders trying to cross-sell additional products and services. Typically, those campaigns are not based on actual data, or not based on actual credit data. They're based on data, but not actual credit score information or information from the credit bureaus directly. So we kind of take, guesstimates at who might be, in the market for a specific product or service by looking at what products and services they currently have with you, what balances they carry, their demographic criteria. And we might even use some different behavioral and creditworthiness models, such as what we call the economic stability indicator and some real property data. But what we can't do with those typical onboarding campaigns is we can't predict the exact timing that someone's going to be looking for a loan or a specific product or service. So we can kind of guesstimate that. We certainly have some success, and we have a lot of customers that are very successful with their matrix campaigns. But you can supplement those types of campaigns with credit-based loyalty programs. And when we talk about credit alerting, what we're doing is we are now able to react with the right offer at the right time to the right person. And we can do that because what we're receiving from the credit bureaus is actually a list, or we would return to you actually a list of all of your members, all of your account holders that have applied for credit within the last 24 hours at any lender. So we gain that ability to reach those members before they defect to your competition, because we know they've entered the market for a loan, they've stopped at an auto dealer, they've had their credit pulled by a mortgage lender or another bank for that matter. And you receive that information, and you have the ability then to deliver a firm offer of credit to those members to cross-sell them for additional products and services at pretty much the exact moment a need has been identified. I mean, this happens very, very quickly. So here's what happens, as I kind of already alluded to. One of your members applies for credit anywhere. That inquiry is automatically posted to his or her credit report when that credit, when their credit report is checked. Those inquiries are automatically categorized by each of the bureaus based on what type of financial product that person is seeking. So, whether it's a mortgage or an auto loan or an installment loan or credit card or even certain insurance products. So the bureaus will segment those out and even segment them so you can tell what's a new auto loan and a new mortgage versus a refinance and things like that. What LKCS does is we take all of those inquiries from all three of the bureaus every day, and we will cross-reference your list of members with those inquiries to identify leads. So we'll be able to show you which specific of your, which of your members applied for credit from that latest data feed each day from the credit bureaus. And again, the way that you use that data is that you're expected to respond with a firm offer of credit immediately after receiving that lead. So you don't necessarily have to, but if you're going to contact the members at all, then you need to contact them with a firm offer of credit. And we'll discuss what that means as we move forward. you have a lot of control over this process as well. So the first thing you can do is you can select which categories of inquiries you wish to target. If you don't offer credit cards, or if you're not looking for auto loans or mortgages, then you can choose that you don't want to receive credit card leads. You don't want to receive mortgage leads, things like that. So you can select which categories of inquiries, and obviously even within that, there are some subcategories that we can work with. And then we can also work with you to establish your credit qualification criteria, so your underwriting guidelines. We can go in and we can say, well, we don't want any members who are currently late anywhere. We don't want any members who are delinquent. We don't want any members with any derogatories in their credit report. We don't want any members that have declared bankruptcy. We don't want any members that have a debt-to-income ratio under a certain or over a certain percentage. All sorts of different criteria we can build in. And then what LKCS is going to do is when we run that comparison for you, we're only going to return that list of members that not only applied for credit with another lender, but who also meet those credit criteria that you specified. So what we're going to provide back to you each day or each week is a qualified list of members. And then we can go one step further. In addition to sending you the list of who those members are, LKCS can send direct mail or email offers for you on your behalf from the credit union to those members. And again, this is happening in very close to real time. So they've applied for credit within the last 24 hours. We get that lead. We send out an email or direct mail piece on that day, and we also send you the names, addresses, and phone numbers of your members who have applied for credit that meet your pre-qualification criteria, so you can follow up with them via phone or any other contact method on your end. One of the unique things about LKCS's credit alerting services is we get all of this data from all three credit bureaus. And there are very few places in the country that actually have access to data from all three bureaus. What that allows you to do is obviously you're closing loans, you're getting loans that would have gone to other lenders because you're being alerted to the fact that they've applied for credit, anywhere else. And again, we can monitor those members daily for auto loan inquiries, mortgage inquiries, consumer loan inquiries, and credit card inquiries. Just to reiterate, you have that ability to set those credit criteria so that we make sure to only identify the prospects that will meet your pre-approval and underwriting guidelines. LKCS is here to send out direct mail and email and even include information in your statements, and I'll show you examples on that. To members whose credit has been checked, they meet your pre-screen criteria, and those offers go out. And then obviously we provide those outbound call lists and contact lists, for you to be able to follow up with those members on an ongoing basis. Credit alerting can also be used for what we call credit prospecting and member acquisition. So we can also provide daily or weekly alerts for non-members that live in your area, that live in certain zip codes, counties, within a radius distance of your branch. So this is anybody that lives in the geography that you specify. And we can compare those people for, look for those people for mortgages, autos, credit cards, etc. And it's the same thing. So now we're helping you acquire members that didn't contact you at all. These are people that never did contact, or potentially didn't contact your credit union. Again, giving you the ability to specify the credit criteria, the demographic criteria, and all of those things to make sure that we're only targeting qualified prospects. And we can also, based on your field of membership, make sure that they fit, if you have a community charter inside of that field of membership. These leads that we identify each day are, again, pre-screened against your credit criteria, and we can also pre-screen them against your account holder, your member list. So if you only want non-members, through these types of campaigns, we can do that. If you want a combination of members and non-members, we can do that. Or if you only want members, we can do that as well. Let's also talk about credit prospecting for the use of acquiring new members. So this is not alerting. Now we're switching over to the credit prospecting piece of our services. When we talk about credit prospecting, what we're doing is we're providing credit data for your use in any pre-screen marketing campaigns. So typically you would use these to solicit for auto loans, mortgages, any type of home loan, so including HELOCs, auto and mortgage refinancing, credit cards, different things like this. What we're going to do is we're going to, in this case, pre-screen your existing members or reach out to qualified prospects in your communities. So again, these are not necessarily people that are actively searching for a loan, because we're not looking at the credit bureau feeds each day, but we're going out, we're saying who meet these criteria that live in my neighborhoods or from my member list. So we're specifying criteria that we're going to extend an offer of credit for a specific loan product. And again, you're going to extend that pre-approved offer of credit to these members or non-members. This data is based on actual credit score information and then all of the other parameters that are available from any of the bureaus. And there's literally hundreds and hundreds of different credit parameters that we can use to refine the lists and the accuracy of these types of campaigns. So your loan department will set the criteria based on your underwriting guidelines. LKCS can write and design and deliver a direct mail piece or an email piece. If they're members, we can send emails because you'll have their email addresses. If they're non-members, or members, we can send direct mail, obviously. And then even provide, phone numbers and contact information, again, back to you for follow-up after those mail pieces or emails go out. And LKCS also has our DataFlex, our full DataFlex system, which is a database marketing tool similar to an MCIF alternative type system. But you can use that to actually measure the results of these campaigns. So you'll be able to see who we sent these direct mail offers or email offers out to, and who has since opened up a loan based on that offer. So you can actually get down to true ROI type measurements. Why is it important that LKCS works with all three bureaus? We get this question a lot, because everybody, obviously, each financial institution prefers to work with one bureau in particular. Everybody wants to work with their specific bureau, but that doesn't mean that your members have applied for a loan that uses the same bureau. So if they work with a lender that uses a different bureau or anything else, if you're just monitoring information from one bureau, you're going to miss quite a substantial portion of that data. By having access to all three bureaus' data, you're benefiting from what we call incremental lift, because what you'll see is you'll get up to a 72% increase in the number of leads we return for both credit alerting and prospecting, just because the universe, the number of inquiries, the number of records that we have access to by looking at all three bureaus is significantly higher than we're looking at one bureau. That's not to say that if you don't want to work with a specific bureau that you have to. We can work with you. If you only want to get data from one bureau or two bureaus, that's totally fine with us, and we can set up the program that way. But we typically highly recommend that you get this data from all three of the bureaus. There's no additional cost working with LKCS and getting data from three bureaus versus getting it from one bureau. To give you an idea where some of this data comes from, this chart actually shows all the different data points that we accumulate into our data warehouse. And you'll see that some of the information comes specifically from credit bureaus. Some of the information comes from homeowner data, provided by the county deeds offices. Some information comes from the automotive industry and different things like that. And we combine all of that into one massive data warehouse, where we're actually tracking 1,100 specific data points and attributes for over 215 million individuals. So that's the type of information that we have access to really help you, again, pinpoint specific opportunities. As I've already mentioned, LKCS does have our DataFlex Document Solutions platform, which provides all sorts of reporting to help you see the results of your pre-screen and credit alerting efforts. We have the ability to incorporate any of this credit-based data that you access into DataFlex so you can track individual campaigns. Now, DataFlex is a separate product. You don't have to have the entire DataFlex system to take advantage of credit alerting or credit prospecting. If you already have it, credit alerting and credit prospecting is a terrific addition to it. And if you start with the alerting and the prospecting or the prospecting and want to get into some reporting, we can certainly show how it works. But what you're seeing here on the screen is actually just some sample reports from inside of DataFlex. DataFlex is built on, has a series of hundreds and hundreds of dashboards and reports that are pre-built in the system. So this can actually show you the dashboard that you're seeing in the back with the graphs is actually showing you just kind of a breakdown of credit score, for members with certain types of loan products. On the lower right would actually be how we analyze a campaign, showing this was the campaign we sent out. These were the accounts that were opened as a result of that campaign. Here's how many accounts were opened, what the balances were, and what the credit score range is. How many people from each credit score range took advantage of that offer, for example. When we talk about sending out firm offers of credit, for those of you that have not ever, launched a pre-screen type campaign, what the credit bureaus and the Fair Credit Reporting Act requires is that when you send out a direct mail piece or you use a telemarketing script when you call any of these individuals, that the language that you use tells the recipient of that direct mail piece or the person that gets that phone call that they've been pre-selected, pre-screened, or pre-approved, for a specific offer. That doesn't mean that they will not apply for your loan. They still have to apply, go through the full application and underwriting process. And in fact, the direct mail pieces or email messages and even some of the language in the phone call discusses the terms and conditions and the eligibility requirements of those offers. Those eligibility requirements include why credit may not be extended. Because if we're telling them that they're pre-approved or they're pre-screened, or they're pre-selected, obviously, if something has changed, if the credit bureau data is incorrect for some reason, if you find out that they end up not meeting your credit guidelines, you do not actually have to, release any funds. They go through the full application process just as if they were not pre-selected. The language of the marketing piece does need to include a minimum dollar amount for which the recipient has been qualified. It does not need to include a maximum, and it can be a range. And then there's a specific opt-out notice and disclosure. LKCS can help you, write and design these mail pieces, these emails, or these telemarketing scripts, and then we take care of the process of getting them approved by the bureaus and things like that. If there's any editing that needs to be done, our staff can help you edit the language of those offers and different things like that to meet the guidelines of the Fair Credit Reporting Act. To give you an idea what these campaigns look like, I wanted to show you a few sample campaigns, and there's three in particular that I'm going to share with you. And these are just used to show you how to leverage credit data to generate loans for your institution. So the first offer that we're going to discuss, and I'll actually outline all three of the offers and then show you what these pieces could look like, because these could all run, and the examples that I'm going to show you, they actually did run at the exact same time. So the first offer that we've identified is a first-time home buyer's offer. So a first-time home buyer's offer, in this case, we're only going to send to renters. So if people own their home, we're not going to send them a first-time home buyer's offer. And then obviously we can qualify who we're going to send this offer to based on their FICO credit score and any other credit parameters that we would work out, with your loan department. We're also going to be sending out a revolving debt reduction offer. In other words, a debt consolidation type offer. We're looking for people that have revolving debt or credit card debt is what revolving debt is, over an amount that you specify. We're only going to send this to homeowners that have available equity, again, over an amount you specify, and chances are that available equity would be significantly higher than the amount of the revolving debt. And we can further, further segment the recipients based on FICO score and other credit parameters. So again, we can look at overall debt to income ratios, bankruptcies, lates, all those types of things, and eliminate those people from the offer. And then the third offer that we're going to send out is just a general home equity offer. And again, these are going to be sent to homeowners without a credit union home equity loan or HELOC. We're only going to send it to people that have available equity over a certain amount that you specify. And again, we can further qualify, the recipients by credit score, and again, any other credit parameters that may apply to your situation. If this was a postcard, this is a postcard that we've done for one of our clients. This can show you what a pre-screen offer postcard could look like. You'll see on the left that obviously there's clear language that says that they're pre-qualified. This is that first-time home buyer's offer, so they're pre-qualified for up to $175,000 on a 30-year first-time home mortgage. Obviously there's language in here and strong calls to action. The offer is going to expire. You better hurry. Here's how you apply. And then there's that disclosure, that opt-out disclosure that's required on the postcard. If this were sent out as an email, you're actually seeing two different emails on this screen. The one on the left is that same first-time home buyer's offer, only this was how it would be sent out in an email. And then on the right is actually the general home equity offer and how that could look like, potentially in an email. Obviously, all the disclosures and everything are below that, further down on the email, but you can see the language is pre-qualified or pre-selected or pre-approved, and it's telling them specifically which product that you're promoting, and what the minimum dollar amount is on those. We can also do these in addition to regular direct mail and email. LKCS and other statement providers have the ability to incorporate targeted letters directly with your statements. So what we're showing here is what we call a trans-promo or trans-promotional statement cover letter. So this is actually delivered for our clients as the first page of their monthly account statement. So we can take the group of members that are approved for any one of those three offers, and we can make the first page of their statement a targeted direct mail letter, and the same thing with the e-statements for that matter. But the first page that they see is a targeted offer, and then the actual statement comes behind this page. Again, on the left, what you're seeing is actually the debt consolidation offer, and on the right is the general home equity offer. If you read the text, it's talking about paying off credit card bills and things like that. But this is, again, these could be direct mail letters, emails. This is a statement cover letter, and certainly we can show you examples of telemarketing scripts that you can use, that your call center can use for these types of offers as well. Pricing, everybody wants to know what this costs. Well, pricing for credit alerting is based on the number of members that you're going to be screening each month. So it's based just on the number of records that we're comparing for you every day. And what we can do is we can provide a free opportunity analysis. So if you're interested in credit alerting, my contact information is going to be up at the end of the presentation. But what you can do is, is call me, and what we'll do is you can send me a list of your members, or we can do it based on non-members and look out into your communities, and we can review how many people have had their credit checked in the past 30 days for, again, mortgage loans, auto loans, credit cards. And we can specify specific credit criteria, so that makes sure that, not only did these members apply for credit in the last 30 days, but they would have met your credit criteria. And we can show you, an estimated breakdown of how many loans you could close, and what this product would cost you each month, and things like that for budgeting purposes. To give you an idea what that looks like, this is an actual case study that I can share with you. And we make some assumptions in this case study. The assumption is that there's an average loan size of $150,000. Obviously, we can, adjust this up or down based on what types of mortgages and things like that you typically close. And we're also basing these numbers on, that your spread, you're at the end of the day, you're making between 2.5% and 3% over the life of the loan. And again, we can adjust these numbers for you based on your actual performance. These numbers are very conservative. Most of our credit unions, most of our customers do significantly better than this, but this gives you a good idea of what you could expect from the program. For credit alerting. On the left-hand side, you can see that I've given you two ranges of the numbers of members that we're monitoring. So the first one that we'll walk through is we're actually looking at a credit union with 45,000, adult members. Once we look at the triggers, in other words, once we actually look at the credit alerting, the feeds from each of the 3 credit bureaus, and after we apply the credit criteria, we're assuming that 1% of these members will have applied for credit in that last month and also pass your credit criteria. And again, that 1% is a very conservative number. So now we're looking at 450 members for that month. We're going to assume that you contact 30% of those members by phone. So obviously if we had a direct mail component, this number goes up. But we're going to assume that you're just calling these members and that you're actually only able to reach 30%. Again, this is a very, very conservative number. If that number was higher, your results are going to be better. We're going to assume that of the 30% of people, of the 30% of the 450 people that you contact, that you're going to be able to close 10% of those loans. What that means is that at the end of each month, you're going to generate 13 new loans as a result of this campaign. 13 loans times $150,000 with it's like a 2.75% revenue per month is going to result in over $53,000 in revenue per month. Based on monitoring 45,000 members, the upper end of the price chart, and again, we have some flexibility here, but the program would cost about $3,500 for us to provide credit alerting services for 45,000 members for a month. So you're looking at a cost of $35,000 at the end of the day. What that means is that you're spending only $15, or excuse me, that you're gaining $15 in revenue for every dollar that you spend in this marketing campaign. And when you look at 100,000 members, there's obviously some economies of scale. That same 1% that we're going to actually be able to reach each month is we're down to 1,000 members. So there's 1,000 members that have applied for credit and meet your credit pre-screen criteria. We're going to successfully contact 30% of those. Of the 30% that we contact, we're going to close 10% of the loans. That's going to result in us closing 30 new loans in that month. Those 30 new loans are going to achieve $123,750 in revenue. The program costs $5,500 a month for screening 100,000 members. And that means that you're bringing in a revenue of $23 for every dollar that you spend on the campaign. So you can see, the return on investment. And again, these are very conservative numbers. To get more accurate numbers for your specific institution, we're happy to run an opportunity analysis where we're actually taking your specific members, running them through the system to show you in the past 30 days how many of your members have applied for loans, and how many of those meet specific underwriting criteria that you specify. And then again, we can take a look at contact rates and close rates and things that you actually achieve to determine what you could expect out of the program. Obviously, it's just a presenter telling you this, but I can tell you that these numbers are very conservative, and you can do significantly better than this, in most cases. When we talk about the credit prospecting for direct mail lists, pricing for credit prospecting depends on several factors as well, and that's based on the number of records that you purchase. So we're not screening and we're not pre-screening in this case, but we're actually going out and purchasing records from the credit bureau. So it depends on the number of records you purchase. Based on specific demographics that you select, some demographic criteria have a small charge associated with those from the bureaus. And then the bureaus also do have a minimum charge. So if you've ever done any pre-screen campaigns, you're probably used to seeing some credit bureau minimums. LKCS, because of the volume of data that we purchase, we've negotiated very, very low minimum charges. So if you haven't done pre-screen campaigns because of the cost, then please contact me and we can go over all of those numbers and show you. But I can tell you that you're looking at, our minimum is only $750 in a calendar month, and that can be spread across multiple campaigns. So based on the number of records you're looking to purchase, you can do one campaign that uses essentially $750 worth of data, or you can have multiple campaigns in the same month. One maybe, pre-screening people for mortgage loans, one for auto loans, things like that. or even a lease, coming, like a lease coming due type of offer, and an auto refi offer, and a new auto purchase offer, all going on in the same month to reach that minimum. It depends on the size of your institution and the size of the geographic area you're willing or you're wanting to reach. But just like we do a free opportunity analysis on the credit alerting side, we can always run free list counts and cost estimates for you on the credit prospecting side. So if you're considering doing any type of direct mail campaign with a pre-approval type offer, then give me a call. We can recommend what parameters to use, based on what type of campaign you want to run, and we can go through the system and run counts to show you how many people, would qualify for your offer based on your field of membership and things like that, to get down to what the total cost of that campaign would be. And that's all I have for today's webinar.